this webinar recording. How often do you have a critical review of the financial accounts that you're receiving from your accountant or that your computer system is producing for you? Are you looking at the material and deciding whether you could get some more information to help you in the operation of your business? Or are these accounts just being prepared primarily to supply information to the taxation office, which unfortunately the vast majority of financial accounts in Australia are being produced for that purpose? Can you use the accounts you receive for decision-making purposes? That would mean that they're management accounts designed to facilitate you and the management team, the leadership team within your business, having better information to be able to guide your team through this overall process. Wouldn't it be better if you could receive trading accounts for each department or activity that you have in your business, so that you could receive a report that you could hand on to the person that's got the direct responsibility of managing that department or activity, to show them how they're going, to make some sense of what the overall activity is all about? That's what I want to talk to you today about. And you can influence this by having a conversation with your accountant and indicating to him or her that you'd like to receive more information to assist in you value adding to your business. And in that way, your accountant will also be assisting you to add value to your business. So would it help if your profit and loss account, rather than being in one account where everything is just thrown in together, and I'm just going to show you what a one account looks like. It might show gross income of $3.2 million, no indication as to where that came from. The business could well have 6 or 7 different income streams, departments or activities. And then the accounts would show the calculation of the cost of goods sold, just opening stock, purchases, freight, a subtotal. No mention of labor. It's very difficult to produce any product unless human beings have been employed to work on that. I think it's an integral cost of that production. Why isn't that cost normally shown? Of course, it will require the allocation of labor across the various departments and activities. But wouldn't that give you more meaningful results? And then we'd show the closing stock and the subtotal, and then the calculation of the gross profit. $1,857,000. Does that mean anything to you if you're running a business that's got 6 or 7 different departments or activities, if it's all getting thrown into one profit and loss account? What does that tell you for management purposes? Not much, I would have thought. And then in the rest of this P&L account, and this is a real business, said overhead expenses of $1.9 million. And admittedly, the details were provided, which included labor, rent, advertising, etc. But then it showed a net loss of $43,000. Does that help you come to a decision as to which activity, which department is dragging your business down? I don't think it does. These accounts that I'm showing you now are typically what is produced, that the ultimate recipient of these accounts is really going to be the Australian Taxation Office, because accountants don't go to any great effort to dissect information for delivery to the tax office, and I'm not advocating that they do that. But what I am advocating is that you should be receiving some management accounts that will help you and your leadership team better operate your business. So wouldn't it help you run a better business if for each of those 6 or 7 departments or activities that you make up your business, that you received a trading account presentation each month? And what might the activities be? Well, if you own your own property, the property account could be one, and then the property account would charge the various operating departments a rental charge on a commercial basis, so that rent gets put into their P&L accounts, because that's an effective cost. You might have a warehouse. You might have a couple of stores, and I've called them a city store. And then you might have transport as an activity. And you might have a suburban store and perhaps a regional store. So you've got these different entities that all have different income streams and costs. And one of them, or maybe 2 of them, could have considerably contributed to that $43,000 loss that we had when I showed you that one profit and loss account. But how would you know it was the transport and the regional store that were causing that problem unless the accounts had been dissected into their various departments and or activities? The whole thing can then be consolidated for submission to the taxation office. But the important thing is, what are you getting to help you manage the accounts in your business, to manage the activities? So I think the format of the trading account should be something like this: the income for this particular department or activity. Now that could then be dissected into sale of labor if that's what you're doing in this business. So you might have a manufacturing type business and you're selling labor, but you're also selling materials. You've bought the materials from the marketplace and you've marked them up, whatever your markup percentage might be, whether it's 10%, 20%, or even higher. And there could be some other items of income that you receive. Then you've got total income. And then you might look at the cost of goods sold for this department. If it's a manufacturing department, I suspect you're always going to have work in progress. So this should be brought to account in your accounting data, in your management accounts, so you can get a true reflection of what has happened. So you've got opening work in progress, which is the closing value from the previous month. Then you're going to have your opening stock. That's if you've got stock within this particular business activity. You might not, of course. The stock may all be in the warehouse and you just draw enough for your current usage in a store or a department. And then what materials were purchased during the month that you're going to be utilizing? What was the freight in particular, because it's all part of developing the cost structure. And then I think you should be allocating the gross wages that the people who have been involved in the producing of the products or services, generating the sales items, charge that to the individual departments or activities. And if you've got an employee who works in a number of different activities, that's all right, allocate it on timesheets and charge the time across. You don't have to be 100% perfect in these allocations, but it's a pretty good idea to get as close as you can to the exact figure so that you can get some meaningful results back. And then we have labour on costs. This is to cover things like the personal leave, which is 10 days per annum, holiday pay loading if you're paying it, penalty rates if people are working overtime and they have to get an extra week's annual leave, long service leave provision, payroll tax if you're paying it, workers' compensation. Now, all that can get lumped together and it ends up at around a figure of around 30%. Oh, annual leave. I think I forgot annual leave. It's one of the big ones, of course. So that's your labour on costs. The reason for allocating it into the monthly accounts is it enables that cost to be allocated throughout the year over 52 weeks in proportion to the direct labour cost. When people have their holidays, the holiday pay is charged against the provision, or the statutory holidays is charged against that provision. And in that way, you are spreading these costs right across the year. And what it does is eliminate an excuse that some line managers come up with and say, oh, well, we had a bad month this month because we copped the holiday pays for whatever period. And that can become a bit of an excuse. And sometimes whilst it occurred, it mightn't be the reason why the performance of the business was below expectations. So by allocating labour on cost across every month of the year in proportion to the labour that's been directly charged to a department or activity, you are getting a more equitable spread of that cost. And you haven't got that automatic excuse, I suppose, that people make as to why a result was down. It makes management and the accounting team just dig a bit further to find why you got an adverse result this month, because it won't be the holiday pay or the long service leave payout. It's been paid through the provision account. You may have had subcontractors who are working on the development of a product. Well, they're part of the direct costs of the operation. So then you can get the total of the direct costs, all of those items. And you may have had a couple of others. You may have had a special advertising campaign. Now, I'd put it below the line, not into this calculation of gross profit. But what we're trying to do is to clearly identify what is happening in an individual department or activity so as to give you the information to better manage what is happening in your business. Then we would deduct the closing work in progress, if it was applicable, and the closing stock. And that would give us another subtotal. And then we'd get what is the accountants call cost of goods sold. So that's the effective cost that you're matching against the revenue you earned for that month. And then we'd have a gross profit for this activity. So your revenue may have been $100,000, but the real figure is, what is this gross profit? So if it was a figure of only $6,000, you might say, gee, we thought we would have done a little bit better than that. And then you can start some investigation to see what's gone wrong. By preparing your financial accounts in this manner, you're then able to get some key performance indicators, which are the real key information to guide management on an individual department or activity basis. Would that help you? Would that make it easier to understand what's happening in your overall business when you can zero in on the results of a particular activity? So you could calculate the materials percentage of income. Now, on itself, none of these key performance indicators mean much on their own. But when you compare them to what happened last month, the month before, or the budget estimate, it starts to mean something. And if you get a figure significantly higher than what you expected or significantly lower than what you expected, you can then investigate to see what went wrong, because a significant higher can be just as wrong as a significant lower. So we've got subcontractor percentage of income, our labour percentage, labour on cost percentage, and the overall gross profit percentage expressed on income. Don't forget, if you have any questions while we're going through on this webinar today, please type in your question. And if you're watching us from Facebook, in our live broadcast, you'll have to send me an email, I'm afraid, peter@eos.biztools.com.au, and I will get back to you to answer your question. Now, big businesses run their activities the way I've just explained to you. They divide, I think, their businesses up into a whole series of small businesses. I've talked to the managers of Woolworths stores and inquired what they do. One chap said to me he had 38 departments, and he knows by Monday afternoon what the trading results were for the previous week. So up until Sunday, he knows the results allocated over each individual department, those 38 departments, showing him the gross profit percentage, and out of that he's able to get some of these key performance indicators. Then the overall expenses are deducted to get an overall net profit. But it would make life easier for you if you were able to get that sort of information. So what other information would you like to receive? Have you sat down and talked to your accountant about this? We've been running a theme for the last couple of weeks at looking at what additional services you can obtain from your accountant. Because some accountants around Australia are committed to supplying a broader range of services to assist you to add value. They really want to perform for you as a chief financial officer. And if you were big enough that you were able to justify the employment of a qualified accountant, and I'm calling them a chief financial officer for your business, they would be drilling down into your financial results. That's part of the role. I know because I did it for 10 years in a listed public company. I was the CFO and the company secretary. And the role was not worrying about preparation of tax returns. In fact, we had an external firm of accountants that prepared our tax returns. And it was a very, very minor component of the overall responsibilities that I had. I think far too much emphasis is being placed on preparing the tax returns and just a set of annual accounts. The real information you need is monthly accounts on a management basis, prepared each month so that 2 weeks after the end of a month, you can be analysing your exact performance on a department or activity basis. So if there's any problems, you can immediately react to them. Have a conversation with the line manager, whoever's responsible for that activity. Bring your leadership team in and discuss what you need to do to rectify a position. That's real management, and your accountant can assist you to do that. You could have some benchmarking information. Some accounting firms subscribe to benchmarking services that are available in Australia. This is Australian data that's been consolidated based on information submitted by accountants on a confidential basis. So that if you're running a mechanical business, there is a benchmarking report that analyzes mechanics. I was about to talk about chemists. Mechanics, so you can compare your business to the good performance. If you're a chemist, the same thing can happen. If you're a general practitioner, medical, you could get a report. If you are running a clothing store, you can get a benchmark report so that you can see how your peers in your industry are performing, and more importantly, how you line up against them. So benchmarking analysis is very important. But that P&L account that just put 6 or 7 departments into one P&L and said $3.2 million income, benchmarking is not going to help them too much, because I know that there were probably 5 benchmarking reports would cover what was happening in that overall business. So you need to have it dissected so the income can be analysed. And what you're able to do then is to pinpoint some responsibility. It's part of management responsibility. Who's in charge of this activity? How come your sales per employee or employee hour this month are substantially less than what they were last month, year to date? What's gone wrong? What happened? Now, there might be a reason. You might find that 50% of the labour were in fact allocated to another area because there was a breakdown and someone forgot to change the labour dissection. Well, that's great. It can then get fixed up. And perhaps some other area will obviously then cost much more to run. But that is then sheeting the cost home, the responsibility home to the person who's really responsible for it. That's management. So why don't you have a discussion with your accountant? You might ask them to coordinate a quarterly review meeting, which is what we suggested last week, so that every 3 months at least, 2 to 3 hours, you ask your accountant to sit down and talk to you about everything bar taxation, about all the other business issues, as if him or her were the chief financial officer of your business. They'd be running a virtual CFO service, and you would be the beneficiary. So have a look at your accounting system. Is it producing information that you can utilize to run your business, to add some value? So you'd have key performance indicators. The benchmarking analysis is very important. The quarterly meeting that I've just mentioned. If you had 4 quarterly meetings a year and then one other meeting on taxation issues with your accountant in a year, I think you'd find that your business was performing better. Now, ESS Small Business can assist you. We are part of the ESS group that comprises ESS BIZTOOLS, and in that entity, we write articles and material for accountants and business advisors all over Australia. But we're not servicing a huge percentage of the market with those accountants. So the reason we run these type of presentations targeted at business people is to make you aware that there are some accountants in Australia who are committed to supplying a broader range of professional services which will assist you to add value to your business. And we are quite happy to supply you details of who those accountants who subscribe to our products are. Or we can organise work to be done for you. But you, first of all, can look at some articles that we have on www.esssmallbusiness.com.au. There's a range of free material and material which there's a fee charged for that you can pursue and decide which you want to utilise. And if you want a hands-on value-adding service, please contact us and we will organise for a proposal to be sent to you so you can understand what is involved. We're going to launch a spring business improvement initiative in October, and we are looking for people who might be interested in participating in that. This is going to be a 10-week series based on a Zoom meeting over 60 minutes each week, and take you through a whole series of the key issues that relate to running an improved business operation. Would you be interested? You'd only be investing 1 hour per week and probably another hour to do some reading and follow up, because we'll be sending you material to read and to think about and some questions that you might put to your accountant. And it gives you an opportunity to start to practically implement business improvement strategies that we'll be suggesting to you and your business, so that in 2020 you can be jumping out of the gates very early, talking to your accountant, changing how you organize the functioning of your business, particularly around the accounting reports, so that you can better manage your business. If you're interested in being involved in this process so we can send you a brochure, please send me an email, peter@essbiztools.com.au, and we will send you the details. Do you have any questions on any aspect? I'm just going to check whether we've got any questions from the people on the actual webinar. I don't see that I've got any. If you think of any later on, please send me an email. And that also applies to the people who are watching this as a live feed. If you have questions on any aspect of what we've discussed today, please send me an email and I will get back to you. And there's my email address, or you could telephone me on 1-800-232-088. If you need more information, you're most welcome to visit our websites. ESS Small Business is www.esssmallbusiness.com.au, or our consulting business is www.towersbusiness.com.au. You're most welcome to visit us to get a better understanding of the type of services that we can provide to you. Have a great day. Thank you for joining us today and being with us on this webinar and live feed on Facebook. Goodbye.